Well. Interesting Asian session last night. To start the week off, we've seen a little bit of a pullback. Why? Before we get into it, welcome, ladies and gentlemen. Yes, it's good to be here. Happy weekend to you all. Did you have a good time? Did you enjoy your Thanksgiving? Are we going to be giving any thanks to Japan with their delayed attempt at cutting or increasing the interest rate? I mean, I'm not even going to say to you what it's about. You know what it's about. And obviously the people that are like, what's going on with Bitcoin? Why is it dropping? The whales, what are they doing? It's because the whales are selling, but nobody asked the question as to why the whale would sell in the first place. Anyways, the carry trade. Yes, we are back again. December 19th looks like it's going to be the start of the unwind of the carry if it's not being unwound right now as we speak. Now, the last carry trade unwind happened on the 5th of August, 2024. A day later, they'd announced that there's still roughly around $4.5 trillion left for the carry to be fully complete. But then it just dwindled off after that. No one spoke about it because the market effectively continued to mark higher. The market's pulled back now, and we've got a little bit of a problem with the carry trade story. Because if you look at the last time we had the carry trade unwind, it was when interest rates were high. Okay? And money was going to get a little bit more expensive on the yen, but it was always going to lead investors to go back into the yen because it was always going to be cheaper. The dollar rates were still at 4.5, 4.25, 4.5%. True rate being 4.3. Okay? But now we've got a different situation. We are now on the come down of the dollar. Yields on the dollar are going to be reduced because the rates are going to get cut. Gold's price is going up, right? You've now got the euro moving up. Why would the euro be moving up? Because the yield on the dollar is lower. Investors are selling their dollars and going into yen. That's why they're going into euro. But if the yield on the dollar is lower, so naturally euro is going to be the thing that everybody goes into. So there's two reasons as to why euro strength is being validated to the upside. So why is euro going up against the US dollar? The yen going up against the US dollar, all right? Pound going up against the US dollar. Bitcoin, Ethereum, Solana have taken a shoe bag to the downside. What does it mean? It means that they see crypto as risk. Okay? Now, if you go back in time and understand the build-up to the carry trade unwind, there was no discussion about it. Bank of Japan said, we're going to increase our interest rates. Oh, no. 31st of July, bang. 5th of August, it happened. And then the markets dropped. Today, I'm going to help you position yourself in what could be the start of the unwind, if it's not done already. That's going to put us into some very interesting areas, right? I'm not bearish. If you come into this channel, which mad love and respect for you guys doing so, and you think that what I'm talking about is bearish, it's not. It's just a rotation in the way money is being played. And we've got to understand how we can exploit that rotation. So let's break it all down, help you understand what's going on, and we'll be able to then break down everything moving forward from this week. Okay? Let's get with the program. Here we go. So, Japan's rising bond yields threaten global carry trade and crypto markets. You guys know this. Go and watch last Friday's video. Okay? The engineering of the carry, right? The crash is being engineered. Just Friday's last video. Go and watch it. Okay? Now, to put things into perspective, when the carry trade starts to unwind, it means investors are going to sell their dollars. Okay? Just for anybody that is new. They sell their dollars, which is why dollar's coming down. And they go into yen. And then they go into euro. Okay? And that's the story. Sometimes what you see them doing is going into the bonds as well. But they're not even going into bonds. They're utilizing the yen as a safe haven. They're utilizing the euro as a safe haven. They're utilizing gold as a safe haven. That's when things start to get really interesting, because they know that everyone's transacting on the dollar and selling dollars to go into yen. Where's dollar yen? About time. We wanted dollar yen to drop. Okay? It needs to pull back, because the carry is going to end up being, or Japanese are going to do one of two things. They're either going to intervene or they're going to increase the rates. And because of the way things are with their economy and the fact that negative interest rates is not a sustainable thing, and that's not sustainable because on negative rates, look how much money they have to pay out. You're peaking out, ladies and gentlemen. 1.871%. It's peaking out. They have to act, which means that by December 19th, we're going to see the rate hike in the Bank of Japan. Happy days. Dollar becomes a bit cheaper. Everything becomes a bit cheaper. You would have got your market reset, in my opinion. Because if fundamentals in the market are all good in the sense of the stocks, I mean, look what's going on here. Intel holds 10% rise after analyst predicts major Apple deal. So already the big tech is still going to be doing what they do and getting into bed with each other and doing business. Investors will look at this and think, you know what? Earnings per share in the future is going to be a positive for me. I'm going to start buying it. Okay. So tech itself is going to survive anything as long as they keep on putting out deals with each other. But the thing is, it's just amongst themselves. Apple's going to be paying for it. Nvidia's going to pay. OpenAI is going to pay. Meta's going to pay. All right. Amazon, they're all paying each other. Technically, they don't need anyone else. They just need the consumption from the user, yeah. But if they're all each other's customer and business partner, well, they're always going to win. So your AI bubble isn't going to be a bubble. It's just, if they decide to pop it, then that's when it pops. It's not going to be based on the masses of belief. It's when they decide to stop doing business with each other, and that's the truth. Okay? Going into it all, guys, Bitcoin took a little bit of a tumble to the downside. Just off the back of the comments from Ueda, you can see here, stocks, even Bitcoin making the news. Bitcoin sell-off, Bank of Japan sour mood. Goes in to say that global stocks and bonds started December on the back foot as renewed sell-off in cryptocurrencies and hawkish comments from the Bank of Japan weighed on sentiment, okay? Goes into it and says, Japan's 2-year bond yield rose to its highest level since 2008 after Governor Kazuo Ueda offered his clearest hint yet that the Bank of Japan may be nearing an interest rate hike. They are pricing it in right now, ladies and gentlemen, okay? How can we position ourselves? Well, check this out. In front of you are a couple of ETFs, right? And the problem is these ETFs have been trading pretty sideways for the best part. And right now, this ETF is going to be opening up at spot 0.71% positive, okay? Only 10 funds are playing this, but this effectively is an ETF that tracks the performance of the Japanese yen, okay? If the yen is going to appreciate, all right, and start working its way up, you can appreciate that. You can assume that this is going to be something that's going to do the same thing. But remember, when it comes to ETFs, they're deemed as money markets. There's not that much volatility in them. You can scalp ETFs, don't get twisted. But ETF money managers, or should I say investors, they come to these ETFs to get exposure. They don't want stupid volatility. They just want exposure. So if you want to try and create a hedge in your portfolio, potentially adding something like this, which is going to back the idea of the yen increasing. Why? Because they're going to be what? They're going to be increasing their interest rates. That means yield on the yen's going up. This has been taking a smack to the downside. It's already up 2% in the pre-markets, okay? So the back of information on what's going on the yen, again, interest rates. When interest rates increase, it means it's offering investors a higher rate of return. Why is Buffett in cash? Why has TSMC built a factory in Japan? Why is Warren buying up Japanese stock? Why is he sat in billions of dollars to only go and convert a few of them into yen? He's only going to be borrowing at 0.75 if they do increase it by 25 basis points, but they're talking about 0.1% increase on the interest rate, which is going to be a critical thing, because if it's not as much as they did before, then of course the market can be like, okay, it's not that much, we can absorb the cost. If they do 25 basis point increase, then that's where it's really going to scare the market, because that's a big jump in interest rate increases. So as it stands, it's 0.5%. If they increase it 25 basis points, it's going to go to 0.75. Okay? So if it goes to that, happy days for the Japanese, bad days for the US stock market. because they will have to rotate out of dollars to get into yen. Yen inflates, ETFs priced behind the idea of the yen also increase. But this will be a slow burner. Doesn't have that much volume. If you look at the daily, it only trades around 40,000 shares, okay? So if you were to put quite a bit of cash into this, you could move the market and everyone would be like, oh, what's going on? So yeah, just be careful, all right? These are just examples of how you can exploit that behavior when you're looking at it from a macroeconomic perspective because you've got the macros back in it, okay? Now, going over to cryptocurrency to put things into perspective. See the issue we've got now. So 3 hours ago, didn't really have that much activity going off with the Bitcoin ETF. I mean, we've seen about 900 Bitcoin leave the ETF. Outflows, yeah, 3. So, yeah, we've actually had 3, 6, 9, 12, okay, 50, 90, 21. Yeah, just shy of nearly 2,000 Bitcoin leaving the marketplace. That's not great. Going into Coinbase Prime Deposit. They keep selling, ladies and gentlemen. They do. And of course, the narrative is saying that it's because of the carry unwind, which means that if the stock market is going to behave the way it's going to behave, it's going to pull back pretty aggressively. It is. Once they increase the interest rates, it's done. All right. Euro goes up, yen goes up, gold goes up. All right. And the NASDAQ and the S&P, they all just slump. The dollar slumps, dollar yen goes down. Any asset against the yen itself is going to go down. So those of you that will trade dollar yen, start going short on Aussie yen. You go short on CAD JPY because the yield on the yen is going back up. GBP yen, you know, these are all going to be dropping on the back of the interest rate increase from the yen. And they've already probed the market and told them that we're going to do it because they cannot sustain these levels. They cannot sustain nearly 2% on the rates that they are offering investors to borrow at, okay? This is the rate that they have to pay the investors back for buying the Japanese bond. It's not sustainable. It isn't. The sad truth is, guys, is the yen is the only currency that is the cheapest thing out there. And the fact that the yen is having this change, it's going to impact Bitcoin. It's all perspective. How do you look at it? Does it now mean that your Bitcoin is going to be cheaper? How many of you would welcome it? You know? How many of you, let's be honest now, how many of you are of the belief that Bitcoin is the hedge against inflation? I want to know. How many of you believe that? Whilst you're answering that question, it's Cyber Monday. The discount code for access to the Platinum membership with 20% off expires today. Okay? The last time you can get access to that is pinned to the top of the chat and it's in the description of this video live stream. All right? Today's your last chance for you to access it, where you get access to the Platinum membership, get trade setups, but more importantly, you're getting access to the new masterclasses that are being uploaded as we speak. Wanted to get rid of this, wait for the actual Cyber Monday, Black Friday sales thing coming to an end so we can then focus on getting that all sorted. That's all happening as we speak right now. So any moment, you're going to get access to the new masterclass sessions, but you'll get access to those with a 20% discount and it's pinned to the top of the chat. So just take advantage of that. Don't wait till tomorrow. Now's your last chance. Okay? It's thanks and it's pinned to the top of the chat, guys. Just use that discount code for 20% off. Okay, so I asked the question. How many of you believe it's a hedge? 0, 0. Gold is still the hedge. Yes, gold is the hedge. Not yet. Far from it. It's not lockstep with gold. Correct. Nah, bro, I'm out. Not on my table. Not on my Monday. Okay, cool. Hedge my backside. Okay. Perhaps the cycle is broken, will play out, which will also be no real bear market. Okay. That depends on reference points. What if we're already... Okay. Oh, yeah, I'm reading other things. It's been a hedge year. It's been Bitcoin still the Wall Street toy. Yes, it is. I want cheaper, cheaper, cheaper. Gold is still the hedge. Listen, gold is still the hedge. It is because Wall Street still thinks it to be the case. Why hasn't Bitcoin gone up inversely against the rates of the dollar going down? When Bitcoin goes down against the US dollar, when the idea of interest rates are being cut, what does that tell you? It tells you that whether you're buying Bitcoin with dollars or you're buying assets with Bitcoin, it's treated the same way. That's a problem. Bitcoin is being treated the same way. it's being treated like dollar. You use it to buy and sell stuff, correct? Yeah. But when the shit hits the fan, it behaves like dollar. It should behave like gold. Naturally, you can buy and sell things with gold. It's deemed as legal tender per se, okay? I mean, you're going to walk into a shop with a bar of gold and be like, just sit there with the clippings and like shave a little bit off and be like, I want 3 TVs and just shave a little bit off, okay? Bitcoin fundamentally gives you the purpose of being able to do that, right? But people are making the mistake of thinking that Bitcoin should be going elsewhere because it's got a supply. Well, what do you want me to say to you? It's not. So there has to be a change in the way you approach it. You've got to diversify the way you expose your belief in Bitcoin because it's not the same before. It's not. You got a better chance of XRP going to $5 than you do with Bitcoin being allowed to be that currency that would be deemed as the hedge against inflation. You really do. And the reason being is because it's so expensive and it's so volatile that it doesn't give the idea of hedge to anyone. It doesn't. It moves so fast, which kills the prospect of the hedge. That's why investors play ETFs, because they're acting as hedges. They don't move around too much. If they do, it's a few percentages, right? They do the bigger playing in the marketplace. Unfortunately, Bitcoin is in the bigger place and it's being deemed as the bigger manipulative, speculative asset. We don't want that. We want to buy the Bitcoin and be like, right, that's it now, okay? I've got a store of value. Don't get it twisted. I'm either going to buy a car or I'm going to buy a Bitcoin, okay? I can buy 2 houses or I'm going to buy a Bitcoin, all right? That's what Bitcoin allows you to do, right? But when it comes against inflation, you're like, moves around a bit too much for me to really put it in there. I'll tell you what, I'd rather go with gold because I know banks are buying gold. I'm not interested in Michael Saylor and his continuous purchases of Bitcoin where he's just getting that money off investors. It's just a third party dude. I want banks to buy it. And I know banks buy gold. So if I can say that banks are buying gold, I'm only going to be doing what the banks are doing. When banks buy Bitcoin, then cool. And that bank does not include BlackRock. No, BlackRock doesn't buy the Bitcoin. Investors come knocking on BlackRock's door and say, please, can I buy the Bitcoin? And BlackRock's like, hold on. Transfer agent, if you wouldn't mind. Mad love and respect. There's your 300 Bitcoin. Thank you very much, sir. Done. Pay me. That's what that is. It's going to be an interesting time for Bitcoin holders because your Bitcoin in principle is going to be looking like it wants to try and attack these levels. And because we've got the next event, like I said to you all before, gold gets prepared for the next hedge. Okay. And my expectation now is gold is getting ready for that. The carry trade unwind is going to do that, in my opinion, ladies and gentlemen. Brinks box. Why does price always go back to that box? Because it's the first high and the first low that is set in the first hour of trading. Okay. And it's usually deemed as a initial balance. So it all depends on your perspective of it. But the first high and the first low is formed. And that tells us exactly the range of price in that time. So the Brinks box starts now and then it finishes at 3 p.m. UK time, which is 10 a.m. Eastern Standard. Whatever range is formed, okay, where it's formed is going to dictate whether or not price is going to go up or down, okay? Now, listen, today, you've got ISM manufacturing data coming out. We've got a week of data. Powell is speaking tomorrow at 1 a.m. UK time. I don't know why he's speaking at 1 a.m. UK time. What's he doing? Is he speaking at a bar or something? Like, well, I don't get why he's speaking so late. Doesn't look like it's going to be a problem, but he's going to be at Stanford University. Yeah, Stanford University audience is going to ask questions. I hope someone asks him, you know, are you going to be leaving? What's the story with that? And he'll probably say, I can't speak about any political matters, which is so boring. Anyway, let's have a look at Bitcoin on the order flow. So we don't really see much happening on the order flow, quite frankly, guys. You've got some bids coming down here in these ranges around 77, 78. You got some offers coming into play over there. It's going over into this right now. We're seeing quite an interesting bout of behavior happening in the offers chart down here. So that's going to be very interesting. Not really seen that much time spent on the bids, but the wave of movement in price is saying to me that the less time they spend bidding and more time offering means that they're buying the dips and selling the rallies, but price is going lower. So the order flow is negative. Okay. In other words, you would understand it to be this. You would say here is negative order flow. Okay. Where you have got price action making a move up and it comes down, move up, down, move up, down. This is negative order flow. So in other words, when you've seen price making a move to the upside, you've got to say to yourself, can I understand that at some point price is going to roll over? So then you'll be waiting for key resistance points, whether you're using moving averages or volume profiles or anything like that. Fundamentally, looking at the way price moves is going to give you a better view of whether it's going to hit a moving average. Whether you translate that movement as the speed of candles, whether it's delta, vector candles, whatever it is that you decide to use it, my advice is always pay attention to how price behaves at the point in time when you think you are going to take a trade. And then always say to yourself, will I be surprised if the move doesn't work in my favor or not? Will you be surprised? In other words, always expect the worst from your position. That way you can anticipate how to act. Because if you go into a trade with no idea on how it's going to work out, which we don't, the only thing we do know is how much we can lose. And the worst case scenario is what? How much money you're going to lose. If you know how much you're going to lose, you've eliminated the prospect of any emotional trading coming into play because you know how much you're going to lose. You don't place a stop loss. And I don't encourage anyone to place stops. I say, know your asset, know your risk, give yourself a chance to absorb. Probe your trades, use light size, commit afterwards, get proof of the move. Stop loss, they don't care about your stop losses per se, but stop losses are never going to be correct. No one will get the perfect stop loss. I don't care what anyone says. It's luck. It's draw of the luck. It really is. You know, if you use the right amount of risk, then you're not going to need a stop loss. Scalpers don't use stop losses. We don't care about stop losses. We're in the trade too soon and out of it so quick before we can even give the market a chance to hit our stops. That's what we are. Is there a great crash being engineered? Most definitely. When I say the great crash, I'm talking about the stock market is going to see a massive crash, but that massive crash in itself is going to be easily recovered because there's too many people with the... Hear me out, right? This is important that you understand this. Where's my thing? Here we go. The prospects of the future right now are what? Interest rates are going to be cheaper on the dollar, right? You've got companies that are going into business with each other massively in regards to AI. AI is continuously expanding, okay? Cryptocurrency is in a climbing move, so it doesn't matter what happens. Crypto will always keep on moving up because people tend to be somewhat more optimistic than pessimistic, okay? So crypto will always do its thing. Crypto's getting massive traction. All right. But the fact that we know that money's going to be cheaper for the US, okay? There's big commitment happening in the AI space and it's not stopping. You got quantum computing development coming into play. You've got robotics coming into play. There are so many things that are happening, okay? That the investor can look at and say in the future, it's going to look all right. So I'll tell you what, I'll wait for the market to correct. The market needs to correct. Once it corrects really badly to make everyone think that what's going to happen in the future ain't going to happen anymore. It is. So it's going to pull back, snap reversal, and then shift back up again. They did it on the 5th of August carry trade unwind. They did it in the April tariffs, okay? They did it with COVID. Nothing is going to be any different. They're going to do exactly the same. You've just got to wait for that move. Everything technically is showing that it should be making that move. The carry unwind is going to be very important. If it doesn't give us a 0.25% increase on the rates, then the carry might have already been priced in. Because if they only increase it by a small amount, which means they only need to increase it by 0.1%, if they increase their rates by 0.1%, they create 168 billion yen in interest income earned. Okay, that basically goes into people's households. So people in Japan will see the benefit of the increase in the interest rates. Okay, so if they can achieve that, then they get rid of the problem of wage inflation and the demand for wages to keep on going higher and higher. All right. That's just increasing it by 0.1%. think the market will be happy with that because it's helping in-house, as in Japan. But when you increase it by 0.25%, now you're hitting the world market because everyone else on the outside has been like, we've been borrowing money at this rate. You're now increasing it by a quarter point. Well, that's going to hurt. Sorry, I'm not having that. Carry, trade, unwind. All right? That's the expectation. Tino, do you think that there is a great crash being... Yes, there is. 2006, 2027. It's a good opportunity to buy. Yes, in my opinion. Look, when gold starts to slow down and base, then you know that the market's all good. Right now, gold is trending upwards because we don't know where we are with the path of interest rates. If the interest rates are good, if the Federal Reserve turns around and says we are never going to cut the rates again, the floor is 3.75, okay, 3.75, that's it. The market will react to that. But because we don't know where we are with that, we don't know what the base rate's going to be, what's the end game for the interest rates, it could be 3.75. It could be 3.25. It could be 2.75. We don't know. Gold will continuously go up because the speculation of the rates being cut anyway fuels enough of it to keep moving up. Gold will easily clear $5,000 an ounce. It can easily take $8,000 an ounce. Easily. It all depends on how long they spend keeping the rates higher for longer. And then if they do decide to keep them higher, that fuels the expectation that rates are going to get cut in the future. So they have to wait for data to come in, which is what's going to send gold higher and higher and higher until we get to that point where they say, we're not going to be cutting the rates anymore. Now we're going to reverse it and we're going to go back to increasing the rates. So then that's when gold's price then starts to pull back. That's when you start buying gold. Okay, after you've seen this big majestic move up, when it starts to pull back and flattens out, say around the 3,500 range, happy days. And then we go into the next cycle. That's how it works, guys. So we dump or pump from here, lol. It doesn't matter. We go up and we go down. What do we do? Tino, should we be buying credit default swaps? Not really, because credit conditions are good. They are. Credit swaps, the credit conditions are good. They're slowing down on the tightening of providing credit cards to the consumer. They're slowing it down. They're not as aggressive on the tightness of credit card requirements in the sense where they're just going to give it out to anyone. And the demand for credit cards is going up now that the rates are going low, are coming down. So if banks are tight and loosening up on their requirements of providing credit, that means the banks are actually concerned. They want to make some money. They can only make it if they give it out. Well, that's what's happening now. Those are those charts. They show it all the time. Market is open. I know. The market is open. What's NASDAQ doing? Let's have a look. Are they pricing in the carry? Are they happy with Bank of Japan's little comment? This is just wild. Just be careful as well, guys. You've got the news coming out very shortly as well. 3 p.m. Okay? Cool. Yeah, Priest, I think I'll do the live stream on Euro Dollar Christmas Day. That's when I think I'll do it. Yeah, I'll do it Christmas Day. Listen, the market, look, people that see the market go down, if the NASDAQ drops down now, okay, if NASDAQ trades below if the NASDAQ gets to the 200 EMA, you're still good. You really are. You're still good. And even if it goes down to 23,000, you're still good. What's the problem? The deeper they correct, this is the key to it. The faster they correct, okay, the faster they will recover. The longer they take to correct, the longer they will take to recover. Just take a look at how many big sell-offs have happened in the marketplace. They recover them by 1 or 2 candles. These are daily candles, well, 18-hour candles per se, but you get the idea. Just look at every reversal that's happened. Happens with 1 candle. See that there, that one there, and then that big move to the upside. That was crazy that day. You know? Nearly up 12%. It's those sort of candlesticks. Those are your reversals. And that's what the market does not like. They hate these V-shaped reversals. They like the slow one. See this slow one? the slow trend, then it's going to recover. All right. It was a slow drop, slow climb, fast drop, fast climb. Yeah. You always find that the climb itself, with investors are in business and they mean it, you'll find that it takes less time to climb back up and recover the time it took for them to drop it. You know? And that's something you got to take into consideration, gang. Cool. They're coming, Zach. The masterclasses are going to be done, my friend. They are. It's just, they're all done. The sessions are all done. Okay? They just need to be moved onto the website, and it's just a drag and drop exercise. Once we get it done, it's done. Okay? You're going to have it very, very soon. All right? There's no issue there. You're going to have it. I've got all the PDFs waiting to be uploaded to it. That's the only thing that I need to do with it. And then we're good to go. All right? Finally, ladies and gentlemen, again, Cyber Monday, the discount code for 20% off the Platinum membership expires today. Take advantage of that. I won't be doing any videos this evening so that you can absorb this video here, but just so you can take advantage of the discount code. But it finishes this evening, so make sure that you take advantage of it. And then we'll be rolling again tomorrow, ladies and gentlemen, back to the marketplace. And of course, with Pal, who's going to be speaking this evening. All right. So if anything else interesting happens today, no doubt I will let you know. And we'll jump onto a live if it does happen. Okay. With that being said, guys, mad love and respect to you all. And I'll be tuning into you all tomorrow. Peace.